Still funny. Morning, everyone. Welcome to today's webinar. This is Lindsay, your macroeconomist for the Asia ex-Japan. So, following last week's presentation on reformers or pretenders, which we talk about Thailand. Today we will be talking about Indonesia. So, yep. This is just to summarize my presentation for today. So for Indonesia, we have downgraded it to a neutral weight due to lack of rigid reform progress, the persistent political risk, and also weak global sentiments. However, we also expect that the resilient private spending should be able to support the Indonesian economic growth rate at about 5%. And we have come to a conclusion that Jokowi is not really a pretender, but he's actually shackled by political complication. We are still pending some rigid reform developments, but on infrastructures projects. But we have yet to see any at the moment, so we'll continue to monitor. And there's some downside risk to the stock market as we trim expectations on earnings growth due to domestic as well as external headwinds. Yep. So today's presentation, this will be the flows. I'll bring you through some of the economy, how Indonesia economy has fared after Jokowi has took his office in October last year. Then some reforms that he has put forth, and how has that actually turned out, and some of the policies that he has put forth, and also to touch a bit about the persistent political risk that's happening at the moment. So, yep. As you can see that for the Indonesia economy, it has actually hit a 5-year low last year in 2014 at touching about 5% growth rate. So not very much to what Jokowi has actually pledged to make the Indonesian economy turn around and to hit 7%. Still far from that. And to break down into the economy as to see what are the economy drivers that are lagging. So from here, you can see that the blue line is exports, the red is indicates imports, the external trades for both, and the black will be on domestic demand. So as you can see from here that the external trades has been slowing down ever since 2011, and the domestic demand has also slowed since mid of 2012. So breaking down into breaking down the domestic demand, we also can see that the black will indicate private consumption expenditure, green on government spending, yellow on gross fixed capital formation, which also indicates the fixed asset investment growth. So basically, we can see that fixed asset investment as well as government spending is slowing down, and we can see that these two are the main factors that are actually pulling down the domestic demand. Meanwhile, private consumption remains quite resilient, and for this chart on your bottom left indicates manufacturing growth in Indonesia slowing down, which also contributes to the slowdown in imports. So for the Indonesian economy, what we are most concerned of is the twin deficits, the current account deficit as well as the fiscal deficit. As you can see that it's still going southward, but current account took a bounce off in 2014. And this is mainly due to a lower oil price and pick up in the trade deficit here. Yeah, so this chart indicates the net exports balance, meaning oil exports minus oil imports. So it has actually improved due to a lower oil price. Okay, for these slides, it would be mainly on the investment. So this is the total investment, and also this would be the FDIs in the Indonesian economy. As you can see that both charts are showing that there's a slowdown in investment in Indonesia. So what happened is that Bank of Indonesia actually had a rate hike since 2013, mid of 2013, to stem the fund outflows, capital outflows due to the QE fears, QE tapering fears. Sorry. With that, we can see that even though that they have eased the benchmark interest rate in February, is still considered quite high, and we expect that the interest rate will remain high in the near term, being that the Bank of Indonesia's main priority is to fend off potential inflation risk and also to stabilize the rupiah. This would actually increase the investment as well as the financing costs, which would continue to weigh on the the investment growth in Indonesia. So moving forward, this would be what Jokowi has put forth, the reformers scorecard. So as you can see that in early of January this year, Indonesia actually scrapped the fuel subsidies and also improved fiscal position, which is a big positive. And Jokowi has also cut red tapes and improved ease of doing business by establishing this one-stop service center for businesses to register new business in Indonesia in one center rather than going all around Indonesia, which would take months. And they have revised a negative investment list, which open up more sectors for FDIs. This is also positive, and Indonesia actually has more fiscal room for infrastructure projects coming from their savings on the fuel subsidies. But as mentioned earlier, we have yet to see any progress. And the land and labor reforms that they have actually lauded to put forth during their elections campaign, we have yet to see any progress as well. And fuel price is not really being managed transparently. They are supposed to take into consideration of the foreign exchange rate as well as the market rate for fuel price, but we can see that fuel price is not really following the market rate at the moment. So indicating they are still managing it manually. There's also another self-inflicting policy they have imposed early of the month. They have actually banned consumption and distribution of alcohol coming from their religious intention. So this will actually hurt their consumer sectors as well as tourism sector. So with that, we'll look into some of the policies that Jokowi has put forth but retracted lately. So this actually creates uncertainty and confusions to investors. So I'm not going to go through all the policies, but some of the policy that you might be aware of is the export ban on the mineral oil exports. So with as you can see from the previous slides where exports plunged, being that one thing is because of the low commodity prices, and the other thing is that because of this ban. So with that, government actually eased off some of the restrictions, trying to save their external trades. Okay. With that, let's take a look at how the political drama in Indonesia at the moment. So this chart indicates the composition of the parliament. Even though that PDIP, the party that Jokowi is currently in, won the favorable vote with 20%, but its coalition does not have a majority say. So with that, Jokowi is actually, we would expect that Jokowi will be facing more of a challenge from opposition, but instead, in February, the PDIP, his own internal party, actually showed a strong disapproval of his administration and policies, and even threatened to impeach him as he become more and more independent. And also with that, Jokowi now faces a crucial test. So either he is to turn into a puppet of Megawati and risk losing the mass support, or he's supposed to to be forsaken by his own political party and forced to break with PDIP and probably even join the opposition. Or the third case scenario will be he will be impeached and removed from the Indonesia's politics. So Jokowi is now in between a rock and a hard place, where he may be forced into bowing to Megawati. Megawati has recently been re-elected as the PDIP's chairwoman for the fifth consecutive term, signaling that there would be minimal change to the party. And the PDIP coalition is actually seeking to pry Golkar, the opposition, which has the second largest say in the House. So if Golkar is to switch to PDIP's coalition, then it would be able to provide a majority say for the coalition in the parliament, and this may countervail Jokowi's executive powers and also force him to act as a party servant. And another thing that we have observed is that popularity for both Jokowi as well as his party is actually waning, and there might be some possible cabinet reshuffling, and there also some tension in the opposition party. So with all this, it sums up quite a lot of uncertainty and unstable political environment in Indonesia. However, for this case, we do not think that Jokowi is a pretender, but he's more of a shackled by all these political complications. So political risk would remain as an issue in Indonesia. However, as we know that Indonesia has always has these political issues, but the track record actually showed that the economy has done quite well through these periods. And if business goes as per usual, the resilient private spending should be able to support the economy. With all these low commodity prices as well as weak global sentiments, weak global demand, what Indonesia needs to do is to expedite on the budget disbursement as well as to push forward the infrastructure projects. And there are some other external risks, being rupiah depreciation, and also the negative global sentiment. So with this, we downgrade Indonesia's equities from overweight to neutral weight. And with the headwinds that I mentioned earlier, we trim expectation on earnings growth, and we will continue to monitor the reform progress. So our Indonesia counterpart actually is currently positive on property and real estate sectors for medium term, and the retailers on the long term. If you still have faith in the Indonesia economy that is going to pick up soon in the second half, these are the few unit trusts as well as the ETFs which you can write on. Okay, this is just to summarize. We downgrade to neutral weight on lack of rigid reform progress, political risk, and weak global sentiments. And stay tuned to continue to monitor the reform progress. And there are some downside risks to the stock markets. Yep. With that, I would like to hand over the presentation to Chris on the week ahead.
Good morning. Just a quick note that still in the heart of earnings season, Singapore, we have the banks really that are the big ones that are headlining this week. A few of the REITs and also Capital Land, which is a major one that's reporting. Also later on we'll get some Marine today that's reporting. We're also in the heart of earnings season across around the world, so there's lots of blue chips reporting. As far as economics goes, there's decent flow as far as economics, but by far the biggest one is going to be FOMC meeting, which is happening on Wednesday. Don't think that they're going to be raising rates at this meeting. Still a chance, but if you look at the Fed funds futures, looks like more likely than not that they'll keep the rates unchanged. And we'll wait for your questions. Thank you.
Hi, this is Yongkai here, the US equities analyst. There's a reader asking whether there's any updates on Iconics. We don't have any updates for now. We're just awaiting the Wednesday results release. Thanks.
Yeah. Hi, Kenneth here. Yeah, I'm addressing this question of Valuetronics. So, the observation is that Valuetronics, the actual price has hit my target price and gone slightly more. So I think my target price was about 49 cents. Now it's 51 cents. The question is a bit cryptic. How much more headroom is there? Okay, so let me just give you what my analysis of Valuetronics was. when I wrote my value report on Valuetronics, giving a 40 cents target price, I laid out my assumptions there already. And if you read tone of my report, I said I was being conservative. I said the probability that Valuetronics would do okay in the next few quarters is there, but I was being conservative. So I still stand by my conservative target price at 49 cents. However, um, I'm waiting for basically their quarterly results to see whether they exceed my expectation. The quarterly results will be towards the end of May. And the thing about Valuetronics, the reason why I'm waiting for their results is because there's a certain limit that you can in predicting Valuetronics cash flows, because although we know what products they are selling, they do not give us insight as to what's the proportion of the different products they're selling. So hence we are conservative, and we like to wait for beating of expectations before we can see what the trends are going for electronics. However, I will say that Valuetronics is at this point is still considered reasonable. It's still considered cheap, and I suspect that right now it's pretty obvious that the sentiment based on the very fearful report that was out a couple of months ago, I think that's been blown over. I think the market is now very confident that all that speculation was not warranted. So as such, right, I suspect that Valuetronics will probably be pegged to the broad market at this point in time. I think that's where the sentiment is going. But even at this price, it's at essentially 7 times PE. It is still considered reasonably cheap. Thanks.
Okay, there's a question on gold and agri. The question is, with the downgrade from Indonesia, what is the assessment for gold and agri, and what impact does the new biofuel requirement have on the sector? Stocks tend to trade more with their listed index rather than where they're domiciled. So the downgrade for Indonesia doesn't necessarily have any impact on gold and agri, the stock, which is listed in Singapore. As far as the biofuel requirement, that is positive for the sector as a whole. However, it's kind of been factored into the news as far as how palm oil stocks have reacted to it. And as far as how it actually gets enacted into law, maybe a little bit tricky at this point, given that there's instability within the political parties. And we'll see whether or not PDI stays in power there. But as it stands, it looks like it's positive. You should see a decent amount of palm oil that comes off the market, which then help with the modest oversupply within the palm oil. our key thesis is that it's not really the palm oil supply demand that's really a problem here, as palm oil is more or less in equilibrium. It's more soybeans. Soybeans is in massive oversupply right now due to bumper harvests in the key growing sectors. So as a result, you have storage numbers of soybeans which are exceptionally high right now. So you really need to look for weather and to really try to improve the supply side. And an emerging theme right now is looking like it's going to be an El Nino year. So you're going to see some unusual weather, which may or may not hit some of the soybean growing regions, but you're already starting to see some weirdness happening in northern Brazil, and you're starting to see it in the western part of the United States, which is not a soybean growing region, but it's kind of indicative that the weather's getting a little bit weird within the key growing markets.
Hello, there's a question that asks how's the company update on Cinema Land and the year end the warrant is due. For our target price is 96 cents and this still stays at the moment. And for the year end the warrant exercise price is about hold on, sorry. Hello, there's also a question that asks, is the Cinema Land industrial property IPO likely to happen, and if so, what do you reckon that would happen? At the moment, what we understand is this is still under discussion, so we will not comment whether this is likely to happen or not, but we do know that the management is actually looking at this, and should the IPO really proceed, we think that it will actually as a catalyst for the share price to actually move in this sense. I mean, to move up in this sense, since it actually kind of unlocks the value of the quota delta mass in this sense. Thanks.
Yep, sorry, Kenneth here. Yep, another question, this time instead of Valuetronics is SIFMEC. SIFMEC has also hit my target price. So we when the share price was 37 cents, we said it was worth at least 47 cents, which was a 26% increase. So in the span of 2 months, I guess, less than a month, we've hit the target price, and now we've gone ahead of the target price. So what's the comment on SIFMEC? Well, the thing is, I still stand by my original report. Is right now, I think that the price has been continuing to go up, essentially on speculation of their recent announcement, in which they are essentially acquiring, or in due diligence phase, to acquire a subsidiary from Technip. Okay, so I think based on market technicals as well as positive sentiment from the Singapore market, and as well as this speculative news, right? I think the share price has been actually drifting higher. Now, in terms of valuation, the thing is, actually there's nothing new that's going on from the last report. There's nothing new. So what the order book has, we really talked about what the order book was, and we talked about the prospects it has. The thing that we didn't talk about was the Technip acquisition. The reason why we didn't do it is because this is actually old news. SIPMEC has been already saying for a couple of months now they're looking to basically acquire something in Asia, and this is just them doing what they said they would do. The details at this point are scant. We don't know. We don't know essentially the ins and out of the company they're acquiring and what price they're acquiring. Hence, it's hard to peg down a fair value. So I will say that at this point, SIFMEC is probably going up based on technicals as well as speculation on the acquisition. Yep. As usual, based on our analysis, we do think SIFMEC is a well-run company, a well-run engineering company. Okay.
Hello. Regarding on the question, following up on the questions that on the Cinema Lands warrant, the year-end warrant is due on the 18th of November 2015. The exercise price for this warrant is 10 cents, which is now, which means the warrant is not in value. So, should the time comes, the investor should opt to either convert it or hold. But do note to the investor will have to opt in to convert the warrant to share, and in this case, it will actually increase the share base floating shares in the market, which means that there might be a slight dilution of the share in this case. Thanks. hello. That's all we have for today. Thanks for tuning in. See you guys next week. Bye.